Hello traders, Dadas here, speaking to you from the Dadas trading room on the Discord platform, where I stream my trades every day. So basically you can join in, you can jump into the voice channel, and then you can watch my screen live practically during the whole European session and the American session. Of course, I get up. I'm at work a bit later than the opening of the London session, so practically 2 hours later. So that's when I usually start my streaming, and the stream goes on live until the end, practically the end of the American session. So you'll find the invitation below in the descriptions. You can just join me. Of course, if you would like me, if you join in and you don't hear me saying anything, well then obviously I don't like talking to myself, so in case you want to listen to me, then please ask me some kind of a question or initiate a conversation with me, and then I will gladly talk to you and show you something else on my screen, whatever you would like me to show you. Okay, as far as the DAX 30 market today, let's put it this way. I had a very good beginning, and I messed everything up at the end of the day. And so I had a very good result. I mean, a relatively good result. And then I practically with one trade I went down below, and then I recovered recovered half of the loss. So I ended the day at profit. So that's the positive thing. The negative thing is that I messed up a very good day, because basically during the whole day, first of all, let's take a look at the whole market. So the whole market was during the Asian session and after the dip, it was going up, and basically until the opening of the Frankfurt session it was going up, and then some more, and then it made after the opening of the Frankfurt session, and then on the opening of the London session, it made a drop. So there was some supply, there was some serious supply there, and the market dropped down, and then it started coming back up. Now, what did I do on the first trade? On the first trade, I basically made the same mistake as I made later on. I mean, the mistake was that I entered a bit too early. So because I entered a little bit too early, right there, yeah, because I entered a little bit too early right there, I wasn't really certain about whether the price would be going up or perhaps going down. And the price, well, it didn't show much of a momentum to go up. So when it came back up and started giving me profit, I got out of it because I wasn't too certain. Because basically the proper way to do it was to wait out until you see something like this. So a naked supply demand, right? A naked demand, or bullish, in other words, bullish, right? A bullish candle that is naked, that it doesn't have any supply right here. It only has demand, and that's a confirmation of this demand, right? And then there is another candle right here, which is also which is a breakout, right? and basically that's the best moment to look for a good opportunity for a trade, right? So at least in such situations, the trade is more likely to continue and not like it did right here, which it basically didn't continue, but left me in such a situation where I was still uncertain whether it was whether this level was acting as resistance or as support, really, right? Because basically this wasn't exactly the context, because in the beginning of the day, in the beginning of the day we are not here, but at the beginning of the day, so if this is today, so then in the beginning of the day we are somewhere right here, right at this on these levels. So basically after this candle, we could see something like this, right? Only that it's well, at least at this moment we don't know if it's well fitting or it's not well fitting, right? So basically until we see some other candles. So let's I don't remember if I was exactly looking at it at this way. Yeah, but most probably I was looking at it in this context, because you see exactly where I entered, right? I entered at this level, and this was a nice sort of support, right? Support here, breakout, come back again, out. So this is more like a support, and that's what I was thinking about. But like I said, I wasn't too certain right there. So anyways, a little while after that, when I saw this consolidation type stuff, then I switched back, and of course then we are now up here. So the only thing I could do was either this, right, or I could also click right here and watch. No, I didn't have that yet, right? I didn't have that yet, so yeah. But I like the bigger contexts usually. Or perhaps I could have done. I could even have done this thing right there, right? So because that's where we are, right? So that's where we are. You see at this moment. So then this fits perfectly. Come on, get out of there. Okay. So this fits perfectly to the situation. Yeah. And that's more or less so I have this resistance level. The price is showing me the tendency to go down, right? So no, I didn't go like this, I went like this. Yeah, so I measured this out and I decide to get in, right? So I get in. Or the price still moves back a little some, but then immediately starts moving down, right? And basically I could have waited this out and until my take profit. Well, I figured out that this was a very nice result, so I closed it. And this was a relatively nice result, right? In terms of percentage wise, right? So I was very satisfied with this. So I decided to then wait out, see what's happening, and exactly you see what's happening. The price is starting to on the opening of the New York is starting like to consolidate, but it's still holding out as resistance, right? Now this wasn't the exact measurement I was looking at. I think I was looking at this measurement or perhaps this measurement, we gotta see. Or perhaps I was even looking at something else like this measurement, because yeah, this is also a valid measurement, or this one here, yeah. No, but I wasn't. No, this one doesn't fit. This one doesn't fit exactly. So it's not a good fit. So like I say, we have to look what I was looking at. So let's try it this way. I hate this. So yeah, let's try it this way. Well, no, it's not exactly. It's not exactly that. I wasn't looking at it this way. Nope. So maybe I was looking at it this way simply. Now let's check that. Now, I don't think I was looking at it this way either. Even though this is a pretty nice fit, right? If you look at it. So yeah, but I must have been looking at it in some kind of another context. Most probably well, let's check this out. Let's check this out. If this was that, I don't know really. No, it's not. It's not fitting right. Anyways, I was trying this, and yeah, basically the trade was pretty nice. Now this one, right? Yeah, we're looking for this one. Come on, we're looking for this one. So maybe it was right there. Or if not right there, then right there, like this. Let's see if that was the context I was looking at. Yep, that's exactly the context I was looking at. So yeah, now I can see that. See, this is the context I was looking at. So in other words, what I wanted to do here was to try out a different approach, a little bit different approach. In other words, all I wanted to do right there is trade from level to level. So in other words, the only idea here was to trade from this level to this level, and that's that's why I entered at a minimum lot with the simple this simple mechanism right here, right? And I simply opened 0-1 lot, and it just happened because I just wanted to open it at the level of this line, but it just happened that the trade opened a little bit higher. Now the stop loss was somewhere above there, right? And that's all. That's all. That was the whole plan. Now I put initially I put my take profit right there, but then I moved it all the way down here. So because I thought, well, let's see if the market is going to get there or not. And yeah, and the market actually did get there, right? You see that the market actually did get there, but you see, it was basically something a little bit in this manner, even though I wasn't thinking of, I wasn't clicking anywhere, right? I just wanted to trade from level to level, and that's why I closed the trade right there at plus 40 pips. Now, if I had entered this at the usual, let's say at around 1 lot, right, that would have been a very hefty and very nice profit. Yeah. And then, what happened next is just I was just watching the market until I saw this consolidation building up here. So when this consolidation built up, we were then right there here, right? So when this consolidation built up, I had these 3 candles, right? That's not, yeah, okay. Just typical sneezing. So it was right there on this third candle. So I measured it out like this, right? I just clicked on it and I decided to watch the market right there. So now we have to refresh. Yeah. And what was happening? Well, I was watching the market as the market was moving sideways. But of course, I saw that I saw a little bit of a tendency right here. So, there's a building of higher highs and higher lows. So I thought to myself, okay, let's look at this closely. And then I saw this candle here moving up pretty nicely. And the mistake was that I didn't wait for the close of this candle, because if I had waited for the close of this candle, I wouldn't have entered this long, because the close of this candle turned out to be not a bullish one really, but a churning one. Yeah. The next candle still not. In other words, this zone is being respected as resistance, not as support. So that's why this mistake. Because basically, sure, looks like the trend is up. Looks like there is some momentum going up. But I didn't wait until the candle closed. So that's why it was the wrong momentum. There wasn't any momentum. So you see that actually the market gave me a little bit of a profit in the next 10 minutes, but I didn't close it because I was hoping for the price to get out of this zone and retest the other zone, which you see that the market actually did later, right? However, the measurement was like this. So basically, the measurement was like this. So my first stop loss was here. Now you see that the market went down all the way right here. So it wouldn't even matter if I had put my stop loss lower. The market would have taken me out anyway. So but I after this price action where my stop loss held out and the price started moving back up, I moved my stop loss over there. So to say okay, this is the new low. It's still higher low. So because I was really for a moment I was even thinking of closing my position right here. But then I decided no. I mean this price is moving. You see this bounce right here was pretty vigorous, with even a bullish gap. So I thought to myself, well, whoa, this is a good thing. So now it's gonna probably move. But the next candle unfortunately closed in the other direction. But that's still not really a reason to get out of the trade. So but all the next candles, well, you see what happened. Initially there was again some hope that the price would be moving back up, but they took me out. They took out my stop loss. So I immediately, seeing what's happening, I immediately turned around at 2 lots. This was 0.9 lots, but this loss basically canceled my previous profits, and I was at a $5 loss. Wow, so I was pretty, a bit frustrated at this moment that I actually messed up my my results today. But the market started, recovering my profits, and at a certain moment I decided to move my trailing stop to this level, so as to secure around half of this loss, because it looked like the market would be still continuing down, but all of a sudden it turned around, and I recovered about 50% of this loss, which ended my day at $10 profit. So that's still profit. That's satisfactory, but the unsatisfactory thing is that I had much more. I had about $30 profit. So yeah, or something like that. I mean, not a, maybe yeah. I mean, sure, even more than $30 profit. So I messed it up. Well, it was a little bit of my mistake because I didn't wait until the close of the candle. Now, what happened next? You can see the market started moving up, and it basically reached reached the level where my take profit had been this take profit, right? So this type of situation is one of those most frustrating for the trader. And the question is, could I have repeated my trade, right? Could I have repeated my trade, and where? Well, basically, you see what's happening right there. The candle to go long after this was exactly this one, and after this candle, you see that the price basically did its job, right? It came up there, but even if we were to trade from level to level, so from this level to this level, oh, this one is called F5, this one is called F6, so trading from level to level, even if we had traded just from level to level, that would have been a very nice trade. Well, anyways, you see, I've very long ago, for a very long time, for many years, I've had this idea that it would be the best way to trade would be trading just levels, from level to level. People often ask me, when I say this to people, they often ask me, what do you mean by trading levels to level? I mean something like this. You measure out whatever method you use, even if you use your standard Fibonacci retracements tool from the standard one available on the platform, then you just trade from level to level. In other words, you watch the price action and the tendency of the market, and then you just place your orders from level to level. And that's it, right? That's basically, yeah. But instead of that, we tend to trade candles and their patterns and their movements, instead of trading level to level. In other words, candles and their patterns and their movements are one thing, but the execution of the trade should be just level to level, and that's it. I mean, level to level. At this moment, level to level is 22 pips, 23 pips. Okay, let's say 22 pips. Right here, 22 pips. But right there is more, right? There is right there is already 36 pips, right? There's 36 pips from level to level, and over there is another 35 or 36 pips, should be about the same. Well, let's say there's 35 here, there's 35 here, right? And there's another whatever, and there is there's 50 pips on the higher level, right? So basically, that's all we would have to. That's all we would need. But of course, we don't do it at. I mean, I wouldn't suggest doing it by pending orders, because pending orders can get triggered like this one, and the price moves back, and then we don't know where to put our stop losses, right? Exactly. So it's sort of like a combination. So it has to be a price action, something like this, right? Not like this, not with a long wick that is rejected from a resistance level, yeah? But a price movement that is showing clear support, right? And yeah, you could say, well, isn't the price showing support right here? Well, sort of is, but not really. I mean, it is showing support from this point of view, but it's not exactly showing support from the price action on the top, right? So the price action and the movement on the top suggests a downward movement rather than an upward movement, right? The least it's a consolidation, and we don't really, yeah. So yeah, like I said, all in all, not a bad day. Not a bad day. It brought some more context, let's say, because with this type of measuring device, you need to go and go, let's say, to a higher time frame. Like here, I'm using the M30, and you have to, or sometimes you even have to switch time frames, and you have to look around for the best context for the given situation. Of course, the moment you see something, because the moment you see something, you start looking for it, right? So this one is not a good situation because it doesn't reach this level. So we gotta cancel this. We gotta search some more, right? And look at the price action, how it's building up, right? Which levels are best supported or resisted, and we just have to click around, right? Maybe it's this one. No, not that one. Maybe it's this one, right? Well, not exactly, because it doesn't exactly give you what we're looking for, right? Or if we already have that one, then we look. Yeah, I mean, this one is a pretty good one, because we have a bounce right there, then sort of then we can look at this support, at this resistance. We can look at this resistance, what's happening, and then trade this. But then when we already know that this is the resistance, then we gotta look for, we gotta start out anew. So like start out now. We're following the price and following the price action until we see that the price doesn't want to go through this level anymore, and it's showing, like here, it's showing some kind of a clear price action, right? So it's a combination of jumping through or jumping between this higher time frame and this time frame, and watching and looking at what fits the best, right? In other words, I was looking at these levels, right, at this time, at these levels, and I was searching on the M30 for such a measurement with this DC. It's called one moment. It's this one is called DCB50C2, right? And there's a reader for it, so I have a reader here, and yeah, and so I was looking for the best fitting context of the measurement for the highs and lows, right? So the dips and then the hills, right? And the one that fits the best is the best, right? That's the way it works. Okay, so like I say, like, subscribe, hit the notification bell, join my Discord server, become my patron, for just a minimum of seven. Of course, you can become my patron at $1 if you per month if you want, but it won't give you any special benefits. I can mention you on my videos if you wish, if you would like to, because if you don't, then of course I won't. But I mean, if you wanna be a VIP on my Dada's training room, then you gotta, you gotta be a patron for at least $17 per month. It's not asking a lot, and you can get lots of benefits for that. Yeah. So please become my patron if you can. And that's all for today. I hope you're keeping well. And see you next time. See you tomorrow. Bye.